This is John Yeager. We're here for another episode of Cast Matters. We're still on our Family Office podcast episode. This is our fifth episode in the series. Today, I'm happy to have Buffie Campbell with Whitley Penn on the podcast. And today, we're going to talk about where oil and gas meets family offices. I heard Buffie on another podcast that Danielle Reynolds did, learning about all the things that we do in the mineral rights and oil and gas world. And I thought we also have some family offices that are investing in energy and have oil wells and those kind of things. So I thought it was a nice segue. So welcome, Buffy. Thanks for joining the podcast.
Thanks. It's great to be here.
Can you give us a little background on what you do at Whitley Penn and little background and just so the audience knows the perspective you're coming from?
Sure. So I've been in oil and gas about 16, going on 17 years at this point. I actually started out on the legal side. I went to law school right out of college just because I didn't know what to do with my life. And kind of funny leading out of that is a friend of mine just approached me and said, "Hey, do you want to do some oil and gas title abstracts?" And I didn't know what I was doing, didn't know anything about it, but I jumped right on into it. I've got that entrepreneurial spirit, I guess, and I just dove right into it. And fell in love with oil and gas. It was just fantastic from day one. And so from there, I did title abstracts. So that's just researching title, understanding who owns and who has that ownership of the oil and gas assets, and then writing title opinions for different operators. And then I moved over into the mineral management space quite some time ago, starting with a large bank and then doing some trust offices after that. And what we really do is step in the footsteps of the mineral owner. So we handle everything on their behalf. They don't have to become an expert in oil and gas. They don't have to understand volume metrics and pricing and what's going on and like the global scale that's affecting their small investment in Midland, Texas. They don't have to understand all that because we bring all that expertise with us. We have software that tracks all the revenue and the volumes. We can create graphs so that they can see things visually. We'll negotiate leases on their behalf and calculate their decimal interest in specific wells so that they can get in pay status on that. We contact operators on their behalf and rectify title issues and revenue issues and anything that pops up so that mineral owner just does not have to deal with that anymore. And we represent small mineral owners that have one asset in West Texas that's just a large producer, all the way to aggregate mineral buyers and everyone in between. So,
Wow. Well, that's it's interesting. I've been with Whitley Penn a couple of years now, 2.5 years, and I had no background in oil and gas at all. And so, Georgia, we don't have a lot of oil and gas in Georgia and Alabama and Florida. So this is kind of a new and interesting place for me to be. And so whenever I get a chance to talk to you or the other oil and gas folks, it's kind of always interesting to learn more. So when we talk about oil and gas, it's a broad definition. Let's talk about what that means. You talked about operating wells and mineral rights and those kind of things. Let's talk more detail about what, kind of the different aspects of oil and gas are.
right. So I like to tell people that I do like asset management under the ground. I don't do any buildings. We don't do anything surface unless it has to do with oil and gas. But so we're strictly everything from the surface down to about 20, 30,000 feet below. But when we're talking minerals, we're talking the natural gas, not necessarily gasoline. I know a lot of people get that confused if you're not in the industry, but natural gas, we're talking oil. There could be butane in that. There could be helium in that. There could be lithium included in the brine water that comes out. So it's anything that has been deemed a mineral interest. In the state of Texas, it has to go through the jurisdictional process. The judicial process and be classified as a mineral. But those are pretty much what we're talking about. Anything that's under the ground that we can then utilize for an energy resource.
Got it. So, do you, I hear a lot about minerals. I don't think Texas is like a home, like maybe Taiwan has some minerals that they use for cell phones and EV batteries and those kind of
Mhm.
things. Does Texas have any of that, or is that not really here? Is that fall anywhere that It's just
It's
curiosity of mine, I guess.
Yeah, so lithium has become a pretty big deal, and the reason for that is because it's located in brine water, and we've there's been studies on brine water, and that's the water that comes back out of the ground. That so when you're drilling a well, you're actually pushing water down, water and sand, and then it's going to fracture, and it's going to hold those fractures in place, that water and that sand, and then the water is going to push back up with pressure to the surface with those oil and gas with the oil and gas, the product that we're actually looking for. So we'll separate all of that out. But we've learned within that brine water there's lithium, and that is what we're using for all of our cell phones and computers and Teslas and
Yep.
all the cars. So we need that for the
Yep.
batteries, right?
Right.
And that has just a high price volume connected to it. And we know there's a huge need for it. So right now there's actual litigation in West Texas. It's Cactus Water versus COG, where the Texas Supreme Court is trying to determine who actually owns that brine water. Is it the
Oh,
surface owner or is it the operator as a waste product?
wow.
So we'll see.
Yes,
There's a
that's a lot of
lot of
money.
money involved with that. But then
Absolutely.
also, Cass County, Texas has a rich lithium reserve there as well. And so we're seeing a lot of leasing opportunities pop up in Cass County, which is East Texas. And then we know that lithium deposit goes all the way up into Arkansas as well.
Got it. So, how much nuclear energy is going to be built in Texas?
That I do not know. You know what? I'm learning more about these small reactors that they have
Yeah.
that are being built. And I know, I believe it's the Abilene Christian University just announced that they have funding for some small nuclear salt reactors, which is very interesting. I am definitely not the expert in that, but I'm fascinated by
Yeah, I have too.
it.
I knew I didn't mean to stump you. I was just, when we talked about energy, I listened to a lot of information about it, and so nuclear. I saw where Microsoft is like. I think Microsoft bought 3 Mile Island is going to develop it
Uh-huh.
into some nuclear. But anyway, we'll
It should be
move on.
interesting.
It'll
Yeah,
be
more to
interesting to
come on
follow.
that. More to come.
Absolutely, absolutely. The more interesting thing to me is where we're going to get all the lithium and the
Hmm.
rare minerals that we need for all the
Oh
EVs
yeah.
and the batteries and those kind of things. So as we kind of think about the oil and gas business, the kind of segue into what this podcast is about, which is the family office world. What do you see from the family office world, high net worth, private client, family office in this space? Do you work with family offices? Do you work with kind of high net worth? How do you see that kind of coming together?
Yeah, so we work with a couple different family offices, and we primarily are that back office support for them. And a lot of times they've got real estate investments that they're managing with the office, and that's their priority. Um, and some just general investments. Those are their like high money makers, right? But then all of a sudden they get approached about a lease and nobody really has the oil and gas experience within the office. And so they're kind of looking around, how do we manage this? What do we do with the revenue? How do we book this? Or is it even the right amount? So that's where we can come in. We'll do that back office stuff. We'll handle like lease negotiations, their division orders, make sure they're being paid correctly, deal with the operators, because a lot of times they just, you don't want to necessarily hire somebody just to do the oil and gas side when you can have a
Right.
whole team do it on your behalf. So that's where we can really come in and provide that additional expertise for the revenue that's going to be coming in underground versus
Right.
above ground.
Yep, absolutely. Well, so, I know we've had conversations in the past, and I think they're ongoing. We provide the GL solution
Mhm.
to the client for their accounting through Sage Intact, and obviously we have some family offices that are invested in minerals and wells and those kind of things. And so, I think one of the things I want to continue to work on is there an opportunity for us to build integration so that reporting can flow back and forth and those kind of things. Because I know that'll create a big opportunity in the marketplace as the family offices, increase their ownership in the space, and they need to be able to report in combination with everything else they have in the family office, like you said,
Mhm.
their investments and real estate and lodges and art collections and
Yes,
those kind of things. So,
exactly.
yep. Um, and then, what I really think about, you know, in any kind of industry like this, and any way and that people are trying to get some work done, the reason they're trying to do it is to get the reporting, get the output, right? Because what's the point? We always say to people when I talk to them on the accounting side, what's the point of doing the accounting if you don't have good output, right? What,
Exactly.
right?
Yeah.
If you can't get a
Yeah.
financial statement out of it, if you can't get a analytic statement out of it, whatever it might be, what was the point of all this? And so, I'm interested to know from your standpoint, you're collecting all this, you're helping, negotiate leases and helping people understand their mineral ownership rights and those kind of things. But obviously, there's some reporting that would need to kind of come out of this. What does that What does that look like for you?
Yeah, so a lot of times we want to make sure that like severance taxes, deductions, that those are being monitored. And there's a lot of tax consequences and benefits actually if you own in multiple states. So we try to track the different states, make sure that whatever withholding tax is taken at that state, that it's being reported correctly on income tax statements, that deductions are where they're supposed to be. If we have a family office that owns a non-producing working interest, there are different levels of those expenses that they're going to want to handle differently on tax side. Intangible drilling costs versus tangible, and marketing and transportation, all that is kind of tracked a little bit differently on the tax side. So we try to break all that down for them. They understand exactly what it is, what is like going to be a tax benefit, what's going to be an expense on that. And um, especially on the non-op side, and we have a lot of family offices going more into the non-op side where they just own a fraction of the working interest. There's a lot of expenses that go along with that, a lot of revenue that goes along with that, and just to make sure that everything is broken down correctly, that they understand if it's an override versus a non-op working interest versus an NPRI versus a regular generic royalty interest with no risk. And if they need insurance added onto working interest assets, that we've got that covered on their behalf as well. So really just making sure that they're standing nice and clean when it comes to the ownership, what they have, and that the documentation is provided to their accountants correctly. That's
Got
a
it.
big one. Could we receive 1099s on behalf of those operators as well? And we do a reconciliation between actual revenue received and those 1099s. And you'd be surprised how many times they're wrong, the 1099s. So we do a lot of operator contacting to get corrections on those so that what's being reported to the IRS is actually what's being received by the client as well.
Yeah, that's
So
kind of important.
that is very important. They don't want to be underpaying their income taxes and all of a sudden a supplemental 1099 comes in or a corrected 1099 and all of a sudden they owe more money. That's never fun.
No, no, absolutely, absolutely. Um, Price comparisons.
Mhm.
You know, talk about that from a, it sounds like there's maybe some benchmarking that you guys can do and give your client some ability to do some price comparisons and, maybe so talk about that a little bit.
Yeah. So when it comes to pricing, we see something different across the entire country, right? So a lot of that has to do with infrastructure that's in place to transport product from location A to location B. So if we've got assets in Louisiana or Far East Texas, the vast majority of that gas is going to be going down to New Orleans. Anything in West Texas, the majority of it's going to be going south into the port of Corpus Christi. So what we're looking at when we're doing price comparisons, it's not necessarily the nationwide standard. We've got that. We've got WTI, we've got Henry Hub. So we have those numbers that we can compare to, but we're also going to combine all of our clients' assets together so that we can see what the pricing is for a specific county. Because in West Texas, like let's for example, if you're looking at Reeves County, there may be a completely different pricing category for West Reeves County than East Reeves County. And so we're going to look at operators that are relatively closer together and make sure their prices and their marketing contracts are going to be relatively similar to each other. You shouldn't see a huge price differential when they're that close in proximity, the actual property and the wells are. So
Right. So that's both for, so when you're trying to value uh,
mhm.
the rights as well as when you're trying to then sell the rights, right? Is that, do I hear that
Yeah,
right?
we're going to be looking at it when all that comes up. Yeah, we have a lot of clients that for like estate purposes, estate planning purposes, we need to have some sort of evaluation going on in there. Um, and we do bring in engineers that will give us a very detailed valuation if we need to do that. We can also just do a very generalized multiple of whatever factor depending on the location of those assets.
Which is probably a combination of that price and then the volume
Yes, exactly. And then we'll multiply it out a couple of years to kind of give some forecasting.
to look at maybe past trends to do some future
Yes,
forecasting.
yes, exactly.
Got it. Got it. Can you, I want to take a step back. I just want to make sure I understood. So you talked about operating interest versus non-operating interest. Can we revisit that a little bit? I just want
Yeah,
to make sure that we have some clear definitions on. You
yeah,
mentioned 3 or 4 different categories, so I thought it might be helpful
yeah,
to maybe kind of
absolutely.
revisit that.
No, I think that's important, and a lot of people don't understand. So, and I'll use Texas as an example, but this kind of segues out into the vast majority of oil and gas producing states. But you've got essentially think of it as a bundle of sticks. So the things that you can own within that piece of property. So you've got strictly with minerals, you've got the right to develop that lease. So you can come in and out of the surface estate in order to actually get a drilling rig on site. You've got the executive right, which is the right to lease those properties, the right to receive a bonus, a royalty, and delay rentals. Now, we don't really do delay rentals anymore because we have paid up leases, but
Right.
the right to those royalties is a pretty big deal throughout the life of that lease, and that even that can be broken down. So you have your primary royalty owner, and then you can also have what's called a non-participating royalty owner, and that is where somebody within the royalty chain has actually conveyed out a portion of just the royalty. So an NPRI owner, the non-participating royalty owner, won't have any access to a lease bonus, but they would have rights to a percentage of the royalty, and that's carved out of the royalty interest ownership, if that makes sense. And then we also have an overriding royalty interest, which is carved out of the working interest, so the operating side of things. And a lot of times you will see that as like maybe an engineer or a landman or a geologist that was working at that operator. Maybe that's their payment or that's their bonus or something. They might get a 1% override out of the working interest of the well. Um, and then that can pass down through generations as well. Um, and when I'm talking about like the working interest versus the mineral interest, when you execute that lease, you're essentially handing over the rights and to that operator, and you're retaining a maybe a 25% royalty. So the mineral owner is going to have 25%, the operator is going to have 75% of that working interest expense. So that's going to be your giant bulk right there. But a
Got it.
non-operating working interest is going to be an owner in that well that pays expenses but doesn't have any rights to make operating decisions,
Got it.
but they will
They
have
just take they just
expenses.
take royalties,
They're going to take a
but
percentage of the working interest.
got it. Got
Yeah.
it.
So,
I think I got that. So the bigger question is, were you hired as a consultant for the show Landman?
unfortunately, I was not. It would have been
No.
fantastic. We need to get this podcast over to Taylor Sheridan. Um, but I will say, and this is a fun fact, one of our land managers, Jason Fitzgerald, his house was actually scoped for the show and had some of the production people come by to see if it would be appropriate as a landman house, which was interesting because he is a landman as well.
There you go.
So apparently, I don't think it made it on the show, but it was an
Oh,
interesting little like segue into it.
maybe season two.
Yeah, maybe at some point they'll come back and give him some revenue for that. So
Yeah, absolutely.
that'll be our claim to fame is his house.
No, no doubt. Absolutely. Well, anything else that you think be important for the audience to know if you're in the family office world and you've kind of thinking about or either got some interest or thinking about getting some interest? Anything
Mhm.
else that you wanted to?
I would say that when and this may not, I mean, it's a family office situation, but it's also like prior to that, if someone's thinking about starting this, is to keep those properties intact. And that's really what the family office helps you do. So if they put it in a trust or an LLC or like a family limited partnership or whatever, and the family office services that, the benefit is keeping that large parcel intact throughout the years. Because as it fractures, as people pass away or they sell it, or whatever reason it's no longer in the family, that makes it that much of a smaller percentage. You have less leverage when it comes to leasing, you have less leverage when it comes to getting information from operators, just makes things that much less appealing, and then it ends up getting sold to like an aggregate mineral buyer at some point down the line. So the more they can keep things intact, and then also as a family office you have the little more risk tolerance there as well, to go into the non-op space and to actually take a percentage revenue of that working interest and to take on that little bit of extra risk, as opposed to just executing leases and doing the royalty interest thing. And there's a lot more revenue in the non-op working interest side than there is on the royalty side. So it's something to really think about, executing a different kind of lease, or maybe like half royalty, half non-op working interest. They can be really flexible on that kind of stuff. So it's a
Gotcha.
it's a fun world to be in, and there's a
Yeah.
lot of opportunities.
Yeah. Absolutely. So, if somebody hears this podcast and they're interested in learning more and maybe needs your services, how would they find you?
So I am on the Whitley Penn website. You can always go there. You can give me a call, 214-393-9305. I'm always picking up. I answer emails. I'm all the time. I'm ready to go. So I love talking to people about oil and gas. I like educating families about this kind of stuff. That's a really big deal for me. I'm actually on a board, the Texas Energy Council, and our purpose is educating everyone from kindergartners to the executive suite in oil and gas. And so
Oh, wow.
we really push the education side of things. We provide scholarships. So it's a fun opportunity. So if I can get into a group, a family, and actually help them retain these mineral interests, understand what it's for, so that that generational wealth can continue on down into the fourth, fifth, sixth generation, that's fantastic. So
Absolutely. No, that's great. Well, your passion certainly comes through, and the expertise is certainly there. So I know that there'll be some questions that you'll get over time. And again, thanks for being on the podcast.
absolutely. Thanks for having me. This was fun.
Absolutely. Well, that wraps up another episode of Cast Matters. Thank you for listening, and until next time, everybody have a great day. Take care.